Welcome back. Thanks for staying with us. We're also joined in by Pankaj Pandey, Head Research at ICICIdirect.com. Pankaj, it's been one of those weeks where we've seen big moves. And I'll just quickly highlight some of those. The Nifty IT was down 8% last week. The Nifty Realty down 6%. The Nifty Pharma down 5%. The Nifty Defense down 4%. So this is just, of course, the top losers. The Nifty Bank was down 2 as well, and that's large given the size that the Nifty Bank holds. Give us your sense. Good time to start buying, and if so, what are the pockets that you're looking out for?
Yeah, hi, good morning. Thanks for having me. I think when you look at two of the biggest exporter segments, which is IT and pharma, so together they contribute nearly about 14% of the weightage, and they are again in the caught in the tariff storm. So I think overall challenges for the market has been there. We have seen about 3% kind of overall negative returns in last 1 year. But I think the domestic leg of the market is shaping up very well, and that is where the opportunities lie. I think exporters will continue to sort of face challenges, and which is why I think the overall sense is that market for Nifty might remain sort of stuck in the range. What we have seen is that since April, Nifty has, from April lows, Nifty has rallied about 18%. And thereon, we have seen correction of in the range of 3 to 5%. We are already at 3% correction level. So possibly 2% additional correction is what we would expect. But overall sense is that with no returns in the last 1 year, this is a good time to sort of look into domestic oriented sectors, the likes of auto, capital goods, cement. And so I think these are the pockets where risk reward is quite attractive. And that is where I think we have been recommending also. And I think risk reward, like I said, is good. Probably this is one of the best times to sort of invest. And usually our sense is that the market's bottoms are made when you have maximum pessimism, which is what we are experiencing at this point in time.
Kunal, shifting the same question over to you on the technical front. Anything that's looking interesting in this market, given the substantial re-rating we've seen, if I can call it that, last week in certain sectors?
So I think the only pocket which is looking a little bit more stable and positive, one is the PSU banking names relatively. The PSUs, the defense stocks, they are the ones, this is the pocket which looks attractive on the short term charts. Most of the other names, for example, the Nifty IT, the real estate sectors, the private sector banking names, I think all of these stocks have grossly underperformed. So I think it becomes very difficult for the markets, and especially after 5 or 6 days of consecutive price correction for the indices, sectors, they lose their, shine even when they are doing very well. So I think in that context also we need to see how the new pattern evolves for the markets. If in case this bounce back, sees a lot more stability, we see more strong sectoral patterns, then we can attribute that we are looking at a start of a new trend for the indices. But as of now, it's just very, very few select pockets like the PSUs, PSU banking names, defense, etc., which are looking far more stable.
Well, BML, do you look at BML? Because over the weekend they came out with announcements joining hands with Bharat Forge and Data Patterns for, the advanced, the fighter jets basically. So do you think that there will be some kind of activity on BML as well?
Yeah, in fact, Sujit, over the last 12 months or so, when this correction happened for the defense and the PSU names, BML was the one which was among the least corrected names. So I think 4,500, 800 was the top for the stock, and 3,700 was the low for the stock, which is an average 20% correction. You compare this with BEL, you compare this with Bharat Dynamics, the shipping companies, etc. They had went through 40 to 50% correction in that context. So when a stock is very strong inherently, it tends to be less volatile or more less prone to corrections, sharper degree of corrections with respect to most of the other peers. BML falls in that category. So I think in that sense, all of these positive news which comes by, it acts as a stimulus for the stock or a catalyst for the stock to start off a trend and then become the leader back again. So I think, I'm not sure how strong the impact would be on the news flow for the stock price, but I strongly believe that if BML manages to give a breakout, say about that 5,000 mark eventually over the next, say, few weeks or so, then it starts establishes itself as a leader back again for the entire defense PSU pack, etc.
But for now, the leadership is with BEL and HAL.
As of now, BEL, HUL to a certain degree, but I think yes, BEML is out. We don't talk of BEML because it's not in that FNO and that high category stock.
Yeah.
But when you look at the sanctity of the stock price, the trends established, BEML was at 500 rupees, Aisha, just 3 or 4 years back. It's now 10x.
Most defense stocks are.
Yeah, some of them.
Most of them.
Some of them,
Yeah.
yes.
Some of them much more than that, in
Much
fact.
more than
Actually, yeah.
Some of them have really outperformed BML.
Yeah.
So, yeah.
And still
Okay.
at very high valuations for many of the defense companies actually.
Yeah, true. Okay, the one space which is also going to be in focus today is going to be the entire FMCG pack. And moving closer to the Q2 earnings this financial year, Unilever was actually the first ever, and I think for a very rare opportunity that they actually do this, they were the first ever to release its pre-quarter business update. Usually they don't really set out a guidance, but they did so this time ahead of their earnings on October 23rd. And this time the GST cuts have been a major factor that is expected to impact their numbers. In fact, Snehi is here to tell us what exactly Unilever's commentary was all about. Snehi?
Well, yes, the stock to watch out for in today's trade is going to be HUL or Hindustan Unilever, because for the first time ever, they've come out with a pre-quarter business update ahead of their quarter 2 earnings. So let's take a look at what this update is. They say that 40% of their overall portfolio, it could be toilet soap, toothpaste, shampoo, hair oil, talcum powder, all of these have been impacted by GST cuts to 5% from either 12% or 18% earlier, and they've said that they're passing on these benefits anyway via a price reduction or enhanced value. So here's what they say the impact on the business could be of this GST. They're seeing a one-off transitory impact wherein they say that distributors and retailers, there's been some disruption seen on that end because they've been trying to clear inventory at old prices. On the flip side, orders have been postponed as buyers were waiting for lower price inventory. On the back of that, pantry purchases have been delayed and demand was muted across the portfolio towards the end of quarter 2. September sales, they say, have been impacted due to this inventory adjustment, and consolidated quarter 2 growth is seen to be near flat to low single digit growth, and this impact is going to continue to be seen in October too, while some recovery could be seen in November. So it's going to be a mixed quarter 3 for them as well, is something that they have guided. Lastly, they're also saying that portfolio transformation is going to strengthen the growth outlook, but for the near term, this is the one-off impact that you're seeing. So if you take a look at this flat to low single digit number, this takes us all the way back to their quarter 1, quarter 2 FY25 numbers, where their revenue was up about 1.3 to 1.5%, but volume growth was healthy at 3 to 4%. So all eyes are going to be on HUL's earnings on October 23 this year to take a look at what their revenue and volume growth is going to be like on the back of this GST impact.
Pankaj, come in here. HUL, do you see some kind of reaction coming in on this counter? And is this precursor to other FMCG companies also talking about the same thing, that there may be a hit on the volumes for the September quarter and maybe the first month of October?
So on the HUL, I think inventory correction was expected at the wholesaler and retailer level, and that was communicated earlier also. I think so that was there in the price. I think what was not there in the price, that this correction or inventory correction could continue even for the month of October. So which means that you will have a near-term sentimental impact on the stock. Our sense is that over a period of time, Q3 onwards, there should be recovery in volumes because company is looking to sort of address the high margin challenges what they've been sort of experiencing in certain categories by pushing more of volume and less of margins. But I think within FMCG, say for example, Tata Consumer ready to eat or ready to consume kind of as a category might sort of benefit because from unbranded to branded, the price differential has been sort of brought down. So Q2, yes, there is going to be impact on FMCG companies. Q3 onwards, one needs to be selective. What our preference is largely towards the food consumer companies, the likes of, say, for example, Marico, which derives 25% of their revenues from the food category. Same is the case with Tata Consumer. So I think these are the names which are expected to do relatively better from a price performance perspective. HUL will probably continue to struggle for some more period of months till the time the extent of volume recovery is sort of known.
And there's going to be some impact on the earnings for FY26 for them as well because of this?
So At this point in time, we are still not penciling in a negative impact because Q3 onwards, there is a sense that you will see a margin recovery and volume growth is something which can sort of pick up. So we are still sort of in a wait and watch situation. Post October, I think once we get some sense on the extent of improvement in the volume growth, that is when I think we'll look to sort of take a call. In general, I don't think we are going to come up with a buy on this stock, given the fact that in general, FMCG companies relatively compared to Nifty are going to underperform in terms of earnings.
Pankaj, hold on to that thought. Lots more to talk about, and a lot of other stocks which are going to be in the news is going to bring about. The auto sales data, could that really be market moving? Although stocks have already moved up.
I think, Aisha, if you sort of look at last few days, the sales volume have been pretty good. I think that, and there could be an element of surprise going forward also, given the queries or the kind of footfalls what we have seen. So our sense is that auto can still sort of do a lot more better than, so it is already one of the better performing indices.
Snap that link with Pankaj,
let's, if he was talking about the fast data, high frequency data there,
So one source we don't cover, but in general, probably there could be a challenge for CDMO players because while yes, US is looking to sort of push more of domestic manufacturing, I think pricing is something which they have also talked about. So in case if they want to achieve price parity across developed markets, then there could be another set of an anxiety which can crop in for CDMO companies. Besides, obviously, as generic companies are sort of getting impacted sentimentally. But I think pharma, we are still not done yet in terms of the overall response from US, and which is why I think probably this segment also can remain volatile for in the interim.
Aisha is one of the biggest beneficiaries for the GLP, semaglutide basically. And because there's a patent which is going off.
And entire auto. And recently we have recommended it even Uno Minda because this company has been growing far ahead of the overall industry growth rate. And as a sort of a content per vehicle is expected to sort of go up. And they are also deriving, if I recollect it right, 24-25% of their revenues coming from Maruti. So we're liking the entire value chain. So Uno Minda is another pick which we have recommended recently.
Okay. All right. So that's with regard to auto. I wonder what the take on IT is, and let's pull up some of the stocks within the IT Nifty IT pack, because last week, well, this was one sector which really bore the brunt in terms of likely FI selling as well as the way in which some of the stocks behaved. Pankaj, do you like IT now at this point? We've seen TCS sub 3,000. Well, this takes us back maybe to 2021 in terms of price. Zero return since that point, excluding dividends. Good time to eat into IT?
So probably not yet, because I think in IT, while sentimentally things have been a lot more negative, fundamentally I think we are expecting about 40 to 65 bips kind of an impact on the margin perspective. But I think the global environment continues to remain sort of edgy, and which is why despite deal wins, though a lot of these deals are not getting converted into revenues. So challenges are still remaining. But I think there are some positives also which are cropping up. One, when you look at euro is up about 11%, pound is again up 6.5%. So you'll start to see some currency benefit there. What we like is again selective names. So so for example, ER&D companies or even some of the BPO companies. So those are not so impacted from this H1B. So I think one can be very selective in IT, but in general, IT I think is still going to sort of witness challenges, and not from the number perspective, but from the sentiment perspective.
Okay, Chandan, I wonder what your view with regard to IT is. Any names that you like within that IT pack?
So as of now, the structure of the Nifty IT index is negative. In fact, in the last week, the IT index corrected by around 8%, and it has been making lower top, lower bottom formation from last 6 weeks.